Welcome to Tesla Daily. Here's the latest on Tesla. First up, Tesla is set to discontinue production of the Model S and Model X. On a brighter note, their full self-driving user base has now surpassed 1 million. In their Q4 earnings report, results were mixed, as the company navigates some strategic shifts. Meanwhile, competition is heating up in Canada, with BYD stepping up their game. Elon Musk has also issued a warning to American companies about battery infrastructure. And finally, there's a notable departure. Tesla's director of vehicle operations has left the company. That's the latest on Tesla. Stay tuned for more updates. Let's dive into some big news about Tesla. First up, Tesla is set to stop production of the Model S and Model X this summer. This is a major shift for the company. They're focusing more on autonomous technology and robotics. By doing this, they can put more resources into developing their humanoid robot, Optimus. The Model S and X, which were once the stars of Tesla's lineup, have seen a drop in sales. In fact, last year, Tesla delivered less than 50,000 of these models combined. That's a huge contrast to the nearly 1.6 million deliveries of the Model 3 and Model Y. Elon Musk made it clear during the Q4 earnings call that Tesla needs to move towards a future with more autonomous vehicles. Repurposing the Fremont factory, which used to make these premium models, shows Tesla's commitment to its long-term vision. This move could save costs and redirect funds into more promising technologies. Analysts are watching closely to see how this affects Tesla's market position, especially with rising competition and economic pressures. Now, on to some good news. Tesla's full self-driving user base has surpassed 1 million. That's over 1.1 million active users worldwide. This growth reflects a shift towards a subscription model for their autonomous driving tech, which could really change their revenue streams. The increase from 800,000 users in 2024 to 1.1 million in 2025 shows strong demand, even with regulatory scrutiny and competition. The subscription model, priced at $99 a month, lowers the entry barrier and could drive even more adoption. With about 12.4% of Tesla's fleet using FSD now, there's still a lot of room for growth, especially with potential approvals in Europe and China. Analysts believe these markets could bring in a new wave of subscribers. This success could help cushion Tesla against any dips in vehicle sales, as the company aims to be more than just a car manufacturer. Next, let's talk about Tesla's recent earnings report. It shows a drop in profits, but the company is still generating strong free cash flow. They reported a 46% drop in automotive profits in Q4 2025, which has investors concerned, but they also reported $1.4 billion in free cash flow, indicating they're operating efficiently. This cash flow is crucial as Tesla invests in ambitious projects like the Optimus robot and expanding battery production. Musk has stressed the need for more domestic battery manufacturing, highlighting risks in global supply chains. Tesla's focus on AI and robotics, along with a shift towards subscription revenue models, could pave the way for long-term growth, despite current profit pressures. Investors need to weigh these strategies against short-term financial performance. Now, Tesla is facing increased competition from BYD in Canada. BYD has received the green light to sell electric vehicles there, which could shake up Tesla's stronghold in the region. With Canada lowering tariffs on Chinese-made EVs, BYD is poised to gain a competitive edge. BYD's entry into the Canadian market is significant for Tesla, which has enjoyed a solid presence in North America. The company can start importing vehicles as soon as tariffs drop, giving it a leg up over other Chinese manufacturers. As Tesla grapples with demand and pricing pressures, analysts predict that BYD's diverse lineup could attract Canadian consumers looking for affordable options. Tesla may need to rethink its strategy to stay competitive. Next, Elon Musk has issued a warning to American companies about battery infrastructure. During Tesla's earnings call, he stressed the urgent need for increased battery manufacturing in the U.S. Musk's comments reflect concerns over global supply chain risks for essential materials used in electric vehicles. He highlighted how Tesla is investing heavily in lithium refining and battery production in Texas to secure its supply chain. With over $20 billion committed to new plants and AI infrastructure, Musk warns that companies that don't adapt may not survive. As the EV market grows, reliable domestic battery production is becoming crucial. Lastly, Tesla's director of vehicle operations has left the company, raising questions about leadership stability during this pivotal time. Benjamin Bates' departure comes as Tesla focuses on AI and robotics, including the Optimus robot. His exit could impact the company's operational continuity as they shift from traditional vehicle manufacturing. Investors should keep an eye on how this leadership change affects Tesla's strategic direction and day-to-day operations. That wraps up our look at Tesla's latest developments. It's a lot to unpack, and the coming months will be crucial for the company's future. That's a wrap for today's Tesla Daily Insights. Thanks for tuning in. And just a quick reminder, this is for informational purposes only, not financial advice. Catch you in the next update.